So I'm doing an interview on MortgageShots right now with Martin Andelman. He's got a site called Andelman Matters. He's one of the greatest minds that I've ever seen, ever heard in the mortgage and real estate industry. He talks about a lot of things: loan modifications, reverse mortgages, foreclosures, MERS, which a lot of people don't talk about. And he's got a really great angle on this. But the one I really want to talk to you about is I saw an article that you just recently wrote, and just tell me about this. You had a title that said, "Where did the billions of dollars go when the banks settled?" Now, I'll tell you this, as a writer, I think about this all the time. We know that some of the settlement money is going back into the agencies, which is funding the agencies, and it creates a real great soapbox for these agencies to say that they're going out there and helping the consumer. But when you have billions upon billions of dollars in settlements, which are still happening right now, how much of that is getting back to the consumers, and where is all the money going?
Well, look, Brian, this has been going on for some years now. I mean, we started out with HAMP, right? We started out with this HAMP, $75 billion, and then they sort of quietly made it $50 billion, and then it dropped down to $37.5 billion, and maybe we've spent $5 or $6 billion, and then we had the hardest hit funds. Remember that whole thing with they were going to give money to all the states. And then the settlements started. Then the national mortgage settlement started with the $26 billion, and how was that accounted for? And then you kept hearing for a while there, the last 2 years, it seems like every month you'd hear a new thing. J.P. Morgan, $13 billion, Bank of America, $18 billion. Now, when you say it keeps the agencies going, okay, now because these agencies are federal agencies, they're already funded, right? They were already going to be open this year.
Right.
We presume they can make payroll, right? I mean, it's the Justice Department. I'm assuming that if we hadn't had the settlements, they would still be in business, right?
Okay.
So they were already funded. I mean, if you got $18 billion or some incredible enough $1 billion into, I don't care what department. I mean, what does it go to bonuses? I mean, it's not a little bit of money. It's obviously just going into the coffers. What's amazing to me is, well, I guess I'm not amazed at one side of this. It's somewhat amazing to me that consumers all over the country aren't screaming their head off going, where's this money going?
Right.
But they're ashamed. They don't want to be, nobody wants to be associated with the foreclosure crisis ever. That's why I write about it, because nobody else wants to, I guess. But, I mean, the reality is the money is just going into the government, and no one is bothering to turn around and say, wait a minute, think about this. If J.P. Morgan is guilty enough to settle something for $13 billion having to do with these mortgages, or Bank of America is guilty enough over countrywide to pay $8.5 billion in settlements, I mean, it's the consumers that were harmed here, right?
Right.
You can't say they weren't harmed, but B of A should pay $8.5 billion for what?
Right. It's kind of like if I commit an offense on somebody else, why would the government be able to settle and get the money for the offense that was committed on me? But don't you think that it's the settlements that justify the money that's being spent to fund these agencies? I mean, that's one of the things that really bothers me. It is the settlements that creates the opportunity for the agencies to get the money.
Yeah, but I mean, the agency would be there anyway. I mean, the agency is a federal agency. I mean, the Department of Justice is going to be there anyway. The SEC is there anyway. Those things are all funded. Now what happens when they get a windfall of $20 billion? Well, that's not a little windfall. That's a giant thing. I mean, that's I mean, it's just shocking if you think about it. It's like that some of that should have to end up back helping the people. I mean, why was it there in the? I mean, is it helping the investors? Is it where? I mean, it seems like the government just sort of gets a windfall for kind of inadequately prosecuting some banks.
So it's your assertion that the settlements are not helping the people that it was intended for. Is that right?
It's just not going anywhere. Someone will say, well, in Maryland we gave $200,000 to the HUD counselor or something. I mean, come on, you got to be kidding. I mean, if you've got to be kidding. I mean, at this point, this crisis started in 2008. It's been 7 years. It's not, nobody can say anymore, well, we didn't really know what was going on. We weren't really prepared. It's been 7 years. You're prepared. I mean, these dollars, the government is having a wonderful time. I mean, all they have to do is, point a gun at, a bank and say pay up, and they have to.
So,
right? I mean,
right. So speaking of lawsuits, how do you feel about the MERS lawsuits? I mean, this has been going on for a lot. I'll tell you this. Here's my thoughts. My thoughts is that MERS has a really good foundation to bring a lawsuit where they should probably win, but our country can't really afford, a lawsuit against MERS. What are your thoughts on MERS?
Well, right, because MERS. I mean, look, the way I've always looked at MERS is that it was the kind of thing where, like if you get up in the middle of the night and you go into your kitchen and you turn the light on real quick, and then like you see a couple of cockroaches scurry out of the way, and you go, oh my God, there's cockroaches in my kitchen. Well, you probably wouldn't have seen them, except you got up in the middle of the night and turned the light on real quick. I mean, MERS, I think, was benign enough. I mean, it was just sort of a lazy way of doing something, a more technology-enabled way of doing something. We don't want to, And then, of course, the foreclosure crisis happened, and it kind of became, well, who the hell is MERS? What's MERS doing? And nothing was right. I don't think that was an evil plan to have that happen. I think a lot of homeowners think it was an evil plan. I don't really believe it was an evil plan. I think it's more of the same. It's just sort of, it's less than competent work. It's less than crackerjack work.
Okay.
And we have it all over the mortgage industry. I mean, it's less than ideal kind of work, but nobody ever shined a light on it before.
Right. Now you're hearing a whole bunch about TRID right now. Do you have any thoughts on TRID?
Oh, well, yeah. I mean, first of all, I mean, you would know this better than I do, but we're ultimately going to adjust, right? I mean,
of course.
I mean, ultimately, it's a new rule. We're going to adjust.
We'll adapt.
So, I think that it's basically the way I read about it was turning 4 forms into 2 forms. I mean, that kind of stuff. I don't know. Look, it's like rearranging deck chairs on the Titanic, isn't it? I mean, okay, 4 forms or 2 forms. Look, I went through the mortgage thing this summer. I followed 4 or 5 cases through funding. And, if you wanted to, you now have something like, I don't know how many pages. It's like this, right?
Right.
When you get a mortgage, it's like a ream of paper.
Right.
Okay? So I guess somebody told somebody that the problem was that there weren't enough disclosures or people didn't know.
Right.
I didn't know I had an adjustable rate loan. I don't believe you, but okay, let's say you did.
I agree with that.
Right, I don't believe you. I think you knew, but so what? The point is, now you get 500 pages of paper. Nobody reads any of it. Nobody read it before. Nobody reads it now. Now we turn 4 forms into 2 forms, and what do you want to do next? You want to turn 8 forms into 6 forms? We can cut it off. You could have a jigsaw puzzle. We could have a crossword puzzle in your package. You could answer the crossword puzzle, and then they would still. I mean, come on. This is silly stuff, right? I mean,
it doesn't matter. Nobody's reading any of it. You can make it 10 forms, 100 forms, 1,000. It doesn't matter. Nobody's reading it. And I agree with that. My analogy is like, I say we take the ingredients of a taco. We're going to take your beans, your meat, your rice, and your avocado, and we're going to flatten out the whole thing, and we're going to call it a tostada. It's a taco, a tostada. How would you like your beans and rice arranged? I mean, it doesn't matter with TRID. I mean, that's kind of how I see it. So tell me a couple of things that you're thinking right now about reverse mortgages. Are they good or are they bad?
They're awesome.
Okay.
I'm on a mission. I'm looking for anybody to debate with me. Nobody seems to want to. First of all,
well, I'll tell you this. Hold on, I'll tell you this. So Dave Stevens was talking about the congressionally mandated mortgage insurance fund for FHA, and he says, well, wait a minute here. A lot of the money that they're getting right now is a result of reverse mortgages, and if they slow down, then we could fall down below the congressionally mandated amount. So, I mean, I guess my question is why are reverse mortgages so important to FHA, their MI fund, and if they're making that much money on them, isn't it coming at the cost or the expense of those who are actually taking these loans out?
No. Well, first of all, let's start here. When the FHA when they said that they had a loss, they had a $1.9 billion loss, having to do with half of that was reverse mortgages, right? That was a couple years ago.
Right.
And everybody had, oh my God, the FHA lost money for the first time. They lost $1.9 billion. Was I the only person thinking that was an amazingly small number? I mean, and Fannie Mae lost, $250 billion? I mean, I don't know. They lost $1.9 billion. So they overreacted. Everybody had a fit and said, "Oh, taxpayers are paying for this," as if we're not paying for FHA. Or Fannie and Freddie. Who cares? The point is, we then said, "Oh my gosh, look at this! It's the fault of the reverse mortgages." It's not the reverse mortgages. It's the meltdown. It's the meltdown in prices that happened. But I mean, if real estate values get cut in half and the whole mortgage industry freezes, you're going to have losses. So yes, now they've raised the premiums, and so now they're making money again, right? They were bound to make money again. They were always making money. They made money since the 30s. They just had a meltdown. We had a 2008 meltdown. Everyone lost. There were no winners. There's 9 guys in New York somewhere in the Hamptons that won. The rest of us lost. Okay? So that's really kind of what happened here. Now, reverse mortgages. First of all, let's get something straight. All reverse mortgage is an FHA loan that gives you the option of not having to make any payments until you die or sell the house because you're old. That's all. If you were young, they wouldn't let you do it. If you're old, they let you do it. The only way they lose is if you don't die. So if you really want to get over, right, don't die, take out a reverse mortgage, you will win. But since we all know we're all going to die, they're guaranteed to get their money. And FHA simply insures it so that in the event that the day you sell or die or whatever, real estate has been cut in half again. It's a once every 70 years thing.
Right.
If that day happens, well, then there's FHA to insure the loan. That's why the bank will make the loan to begin with, so it's government insured. These programs exist in every country, essentially every country on the planet.
Right.
England, France, Germany, Korea, Japan, Australia, on and on and on. They're equity release products. There's nothing wrong with them. How we turn a mortgage that doesn't require a monthly payment into a bad thing is stunning to me. I haven't been around long enough. I don't know how we did that. We have a mortgage you don't have to make a payment on, and someone made it a bad thing? Really? I want one. I'll take one tomorrow. I'm only 54. Can I have one now?
And by the way, people don't know, the older you get, the more your reverse mortgage is going to pay for you because they're leveraging your death. I mean, that's what it really amounts to.
Go
ahead.
Look, we have 12 million people in this country today, roughly, depending on what number you want to listen to, 10 or 12 million people here that are over 65 and have mortgages. And many of them just refinanced a few years ago. So, you're over 65 and you have a 30-year loan. What could go wrong? I mean, are you kidding? I mean, at some point in your retirement, the odds of something happening where your income drops or your expenses rise are overwhelming.
Right.
When that happens, you'll start paying it. Your savings will start paying it. You'll start running out of money. Next, you'll be calling Andelman Matters to find out how to get your loan modified. It's not a good path. If you can get rid of your mortgage payment, get rid of your mortgage payment.
Right.
It's crazy not to.
Right. No, I totally agree with you. And the qualifying for seniors and older people who own their house and have equity, I mean, it creates a great opportunity. The people who don't like reverse mortgages are the recipients of that house in the event that the homeowner dies. I mean, that's what it really comes down to. But I agree with you. I mean, I totally agree with you about reverse mortgages. Loan modifications, where are we at with the whole thing? Is the whole thing over? Our foreclosures are down to next to nothing. Everything's good. Our vacancy ratios are nothing. And boy, people are buying houses. Where are we at?
No, it's precariously the same. I mean, look, if foreclosures are down, it just depends what you compare them to, right? So if we've got a bunch of comparisons going on between, let's compare now with 2012. It's like saying the number of deaths. The number of deaths are down this year. It's 1946. Compared to 1944, oh my God, people are living like crazy now. It's like, well, the war ended. Oh yeah, that's right. The war ended. I mean, it was a war, right? So comparing it to 2011, it's like somebody said, look, home sales are up. Compared with May of 2009.
Okay, so relative to the crisis, I get what you're saying. Relative to the crisis, yeah. I mean, things are better right now. But I mean, when you're looking at our days on the market, and you look at all these analytics, and you look at rates, you look at the products right now. I mean, things look pretty good, and we see that new foreclosures are down, starts are up, buildings up. I mean, have we not recovered?
No, I don't think we've recovered. I mean, the problem is this. I still get 4 or 5 emails every day. I still get the same flow of people that have no. The problem is the loan modification process is fundamentally the same. Okay, and I've written about it, and I'll just draw it out just so you see how crazy it's the same craziness. You call your bank says you can't make payments. You have to stop making payments. You send in stuff. You don't hear from anyone for a long time. It goes on for a long time. They lose shit. They need stuff. It's the same kind of craziness. Nobody can tell you along the way whether you're going to be approved or not, or what the requirement is or isn't. It's like, and then one day, after, I don't know, 6, 7, 8 months, could be a year, whatever the number is, depending on the servicer, it's like, surprise, your loan's modified. You had no idea yesterday you were ready to jump off a bridge. Today, your loan's modified. You have no idea why it happened. And then the guy goes, well, you have to make 3 trial payments. Well, do you have anything in writing? No, nothing in writing. Just make the 3 trial payments. Well, do you know what my permanent model looked like? No idea. We have no clue. But just go ahead. Now, if I get a regular mortgage, if I go to you and say I want a regular mortgage, right? You'll tell me exactly what to send in. You'll tell me whether I'll be approved or not. You'll tell me what my payment will be. You'll tell me even my escrow fees. You'll be darn close. And it'll track on something very close to that schedule. But if I go when I'm a loan modified, no one has a clue. Just stop making payments, send the stuff in. We don't know. No one talks to anybody. We have no idea what's going to happen. Then one day you hear, oh, you're approved. And you, oh my God, you run around, you start making big trial payments. Then you wait to see what's going to happen next. It's like playing pin the tail on the donkey in the dark with no shoes on and glass on the floor. It's like, go, hit the donkey. You go, I have no idea. And people apply 4 or 5, 6 times. Now, I understood, I guess I wasn't so understanding, but I later became more understanding that in 2009, this was a new thing. No one knew how to do it. No one was prepared. President Obama announced something that didn't exist, and everybody called the bank and nothing. I mean, it was a zoo. But it's been 7 years. Surely we could figure out a better process than this by now, couldn't we?
But
if we could just fix that.
But are there still people? I mean, here's devil's advocate. The people who signed those notes. I agree with you. What you said a couple of moments ago. They knew. You know if you're getting an arm, not getting an arm. You know if you have a balloon payment. You understand these things. And where is the personal accountability from the borrower who got the loan in the first place? I mean, do they not hold some responsibility in this whole thing?
Sure, of course. But when you contact your bank and you say, "Hi, I'm having trouble making my mortgage payment," and they say to you, "Oh, you can apply for a loan modification," and then they invite you in and say, "Here, you're going to have to stop making your payments, and then send us this package, and we'll send you the package in the mail, and you fill it out and send it to us." I mean, at that point, this should resemble some type of normal banking process. So it shouldn't be this sort of crazy unknown thing.
So just a couple of weeks ago, they had a deposition of 6 Bank of America employees who were working on loan modifications, and they said in their deposition that they were told to lie, that they were told to stall, that they were told to sell other things besides their Hamp and Harp, and that they were actually bonused on doing a really piss poor job. Does that surprise you?
No. Does it surprise you? I mean, first of all, they're bonused for doing the normal things, right? I mean, I'm sure the bonus programs are in place. The bank doesn't, you've got Bank of America, for example, hired roughly 50,000 people to address this need. 50,000. I've been to B of A. I've toured around there. If you could just sort of imagine, 6,000 people on the second floor. I mean, they can't even let them go to lunch. They've got like 11 restaurants in the downstairs, thing, because you got 14,000 people working in a building. If everybody went to lunch, the whole town surrounding the place would freeze, right? No one could eat lunch.
Right.
So, I mean, they're basically the Golden Gate Bridge of training. I mean, you're always training. Fannie's got their own rules. Freddie needs their own rules. The FDA has loans. They have their own rules. Try to get an FDA loan modified. That takes a year just for them to pick up the phone at the FDA. Nobody knows how to do it or what to do. Then you've got all the private securitizations, and they've all got their own rule books and their own things. I mean, you're constantly training, and it's a lousy job. You want to pick up the phone all day long and listen to somebody either yell at you or cry at you or whatever. Why can't my loan be modified? The president said my loan. It's just a very difficult job, and nobody wants it. So, and then you're always training, and you're always, you're constantly in some kind of training program, and then the rules change all the time. The government. I mean, this thing. Look,
it seems impossible, is what you're saying.
Yeah, there's nothing like it. I mean, there is no other thing in the world where somebody says to you, look, it's a black hole. Welcome to my black hole. Fill out the paperwork, send it in, and then pace nervously for the next, I don't know, could be 2 years. We're not sure. Just keep pacing. Eventually, someday, somebody will call you. I will tell you an exact, true, factual thing that I just went through. I just watched, right? Someone applied, because I follow these things. Somebody applied for a loan modification. They sent in all their paperwork, and it was all done by the CPA and this other expert, so it's all perfect. It went into the bank, and about 8 months went by, where every Friday the bank would call. They were very nice. They'd call. They didn't know anything, but they would call. Every Friday they'd go, hi, we're just calling to touch base. Do you have any questions? No questions. Here we go. 8 months of that until they went, you're approved. And the couple went, oh my God, it's like being on The Price is Right. It's like, oh my God, there's no notice. I mean, it's all of a sudden, yay, you won. Terrific. And then 2 weeks later, they said, oh, I'm sorry, you're not approved. Not approved. Well, why not? We were approved 2 weeks ago. No, today you're not, because you have a tax lien. The people had a $10,000 tax lien. It was a small tax lien from a number of years ago that they hadn't filed, whatever. They had to file. They had to clean it up. So we tried to make the argument with the bank and said, look, what the hell does that have to do with the mortgage? I mean, it's a tax lien from 2007, whatever. They'll take care of it. I mean, no, can't do it. It's a tax lien. So they asked me, well, what should we do? And I said, my most scientific advice, just apply again. You'll probably get a different answer. And so it's like I told a room full of lawyers once, if you hear this statement from a bank, just hang up and dial back. It'll be a different answer. Sure enough, these people reapplied. In August, this has just happened. In August, they reapplied right after being denied for the tax lien. Same tax lien in place, same paperwork. Their numbers haven't changed at all. They reapplied. This time, 2 weeks later, they got approved. Their trial payments were October, November, and December, and they just got their permanent mod. Same tax lien, same numbers, same everything. Whoosh! It went through like, through a goose. Straight through. We're approved. You're done. The last time we did this, it took 8 months, and we got denied because of a tax lien. Same docs, same bat time, same bat channel. Same thing. 2 wildly different outcomes. Same bank.
So why is that? Why is that?
Because there's no system. There's obviously nobody caring about trying to fix this. I mean, look, I once, about 2 years ago, I won't mention the bank, I'll be very nice, but I went to this large servicer, this large brand name bank, and I had some meetings with some of these vice presidents. And at the time when I went, I figured, this is probably 2 years ago, I figured that we had reached a point in this country where no one would say the loan modification process is going well. No one. I mean, we've seen the national mortgage settlement. We've seen the new TILA and RESPA regs. I mean, no one would say things were going well until I got to the bank and I met 2 vice presidents, the only 2 people in the United States that would say it's going well. They are the vice presidents at the bank in charge of the loan mod process. And I realized after being in the meeting a very short period of time, maybe 5 or 10 minutes, that I hadn't thought about this correctly at all. Of course they think it's going well. What else would it be? Do you think they're going to go to their bosses at the bank where they have meetings every week and they go, how's the loan mod process going, Frank? And he goes, oh, it's hell, Charlie. It's just awful. A total soup. I can't seem to control it at all. I'm basically completely helpless or inept. Either way, you should obviously fire me. What? No one's going to do that. So they show up at the meeting. They go, how's the loan mod process going? And the VP says, well, it's going perfectly. Swimmingly, actually. If it weren't for those borrowers, those darn borrowers are, they're awful. but we are flawless in our department. We optimize and do everything absolutely correctly, and whatever else I could say in order to get my bonus at the end of the year, that's what I will say.
Yeah, but don't you think the banks are overmatched? I mean, they were kind. We had a moment in time, and it was kind of like the levee broke, and they were overwhelmed. I mean, how could they have dealt with this better? I mean, under the circumstance. I mean, didn't they?
My favorite question.
Okay, let's hear it.
This is my favorite question. I got to tell you. Look, remember the national mortgage settlement?
Yeah.
$26 billion. Well, Bank of America was, as part of that, was ordered to do. It was either 6.8 or 8.6 billion. I can't remember right now at the moment, but it was billions of dollars in principal reductions. Remember that part of it?
I do.
Reduction. Okay. I interviewed 2 Bank of America vice presidents at the time, and by the way, I like Bank of America. I think they're better than the others. Okay, they're far better than the others. Compared to Wells Fargo, they walk on water in loan modifications. Okay, they better. However, now they were ordered to do these principal reductions. So the government ordered it. It was a court-ordered thing. They had 3 years to do it. They did it in 6 months. Something worked. Let's do that again. Can we do that? Whatever that was, can we do that again? The difference was that they couldn't be sued, right? Because the government, it's a court order. So they sent out this information to 75% of their investors said yes. And they modified, they principal reduced, they dropped they did everything. 6 months they were done. They had 3 years to do it. They did it in 6 months. Now, if you listen to the interview that I did with Eric Telejohn from BMA, I said, well, what about Fannie and Freddie? I mean, you know how many times I've had to write the sentence, of course, the government service entities are not participating in the government program. I mean, it never makes sense whenever I write it. Fannie and Freddie, if we have a government program, Fannie and Freddie aren't participating in it. Aren't they part of the government? Well, yes, technically they are, but they rule the world, so they don't get to, they participate in it's their sandbox. They don't want to play on this one, okay? The point is, if we were to make this consistent, and I asked Eric Telejohn at BMA pointedly, well, what if Fannie and Freddie, what if everyone had to participate? What if the government just said, look, I don't care who you are, here's the rules, we're doing this program, we're fixing the mortgage problem. Well, then BMA would have it done overnight. They'd all have the same rules. You wouldn't have different books for everything. You wouldn't have 500-page documents governing every little transaction. They did what they had 3 years to do in 6 months. Let's just do that again. We'll be done here. We'll have all the loans fixed. Just do it again. Whatever that was, do that.
So now for 2016 going forward, New Year's resolutions, I mean, what do you see, in your crystal ball, what do you see for the mortgage industry going forward next year?
Well, I think next year is going to be a very difficult year. We've been refinancing everyone with HARP for, annually, right? I mean, it's like it's been going on a long time. So now we're looking for new buyers. I mean, what happens we have a lot of investor money still going on. I mean, what was 30% of the sales last month are cash. We still have, a third of these deals going down for cash. You still have a lot of investors. Hopefully, credit loosens up a little bit. It's very different. I mean, if you follow some of these things through the approval process, I mean, I saw a bank last summer ask somebody for their 6 months of their storage bill. Their storage. They have a storage unit. As if somehow when you pay your storage payment is indicative of how you're going to handle a 30-year mortgage for $500,000 or something. I mean, the person was running around on the last day trying to figure out how to get the storage bill. And they wanted the ledger. They weren't happy with just the payments. They wanted the ledger from the storage company. I was like, you're kidding, right? That's crazy. Hopefully, what we have now is an overreaction. And I think you and I both knew we'd have an overreaction. The pendulum swings too far the other way. I mean, yeah, it's become almost insane. When Ben Bernanke was turned down for that refi a couple of years ago, I thought that was, one of the funniest headlines ever in the history of headlines. I mean,
it's what an English major would call ironical.
Yeah, exactly. It's highly ironical. And what I was surprised at was that he was surprised. I mean, Ben, they're your rules, Ben. Ben, this is you. I mean, you're the one that retired. You don't have any income. This is you. You did this to you.
So last thought. Anything on the CFPB?
Yeah, aren't you disappointed? Isn't that disappointing? That is really a disappointing thing because
you were on board with him.
Huh?
You were on board with them when the whole thing came down. You were on board.
I thought we would benefit from having a federal agency that would I think I was wrong and they were right. This thing is just like, it's like sort of the consumer Gestapo or something. I mean, it's like, what are you guys here to do? I mean, they're spending more time screwing around with like the broker's compensation or something. I mean, what are you doing? How is this protecting anybody?
Right.
What are you doing? You're running around putting guns to someone's head, going after minor issues and finding people. You're looking for deep pockets, and we should be past that by now. This is 2015, and I mean, if it's really harming someone, fine. There's a lot of things out there that are harmful. Screwing around with small, minor things of how a mortgage broker operates or how a realtor operates isn't fixing anything. I think they've gotten a little carried away. Power corrupts, and absolute power corrupts absolutely.
Right.
They're scary now. If the CFPB says, I mean, and I'll give you an example. I have to give you an example as it pertains to reverse mortgages because it's my mission in life now. But Richard Cordray last year came out and said 10% of reverse mortgages are ending in foreclosure. Now, besides the fact that, again, that seems like an incredibly small number because compared to other mortgages, I mean, whatever. But that's not the point. The point I want to make is when I heard him say that, I went, how can that be? How can a reverse mortgage end in foreclosure? There's no payments required. How do you end up in foreclosure if you don't have to make payments? So I read every article that he wrote. Everywhere it was quoted. It was echoed all over the press. 10% of reverse mortgages end in foreclosure. Now, what he was talking about were property taxes. I mean, in every case, what he was talking about is someone who couldn't make their property taxes. And then blaming it on the reverse mortgage as if somehow, well, gee, if they hadn't had the reverse mortgage, they would have been able to pay their property taxes. No, there's no payment on the reverse mortgage. This is about property taxes. Why are you making it sound like it's the reverse mortgage? It's not. It's property taxes.
It's framing an agenda, don't you think so?
Yeah, it's clear that it's like, look, he's just looking for something negative to say because the headline has the word mortgage and senior in the title.
Right.
The only thing that would be better would be if they had mortgage and children. And then they could do a really great thing about how mortgages are destroying children in elementary schools. The press would love that. How can we tie this to just hurting children? Look, a mortgage is a simple thing, and I tell people this all the time. There's nothing complicated about it. There's nothing complicated about a reverse mortgage. It's a very simple thing. You're going to put so much down. You're going to make payments of X amount. There's going to be an interest rate of this. And if you don't make your payments, we now know it's going to be a tremendous headache. We always knew that before.
Right.
You could lose your house to foreclosure. You might have to sell it. Real estate could go down. So, okay, it's a risk. I mean, what isn't? But it's a risk. What is it? Now, we should go after bad guys. If there's predatory lending going on, if there's somebody taking advantage of people, absolutely, let's go after bad guys. But let's stop with these blanket solutions that aren't fixing anything. They're not protecting anyone. They're just continuing to restrict the market that's keeping our economy feel like a giant wet blanket that we're, wearing as the government goes, we've recovered. It's like, does it feel like we've recovered to you? I mean, everyone looks around like, well, not where I live. I don't know, whatever. So that's going to go on and on. I'm afraid we're going to bump along the bottom for a while. I mean, it's just going to continue to be more of the same. They're not going to let anything change. It's unfortunate, but you just have to go, well, these are the new rules where you just got to play with them. And I think there's definitely opportunities out there, but there's a lot of areas that are going to have problems.
Well, I agree. And, hey, listen, I want to close this up right now. Like I said, I got Martin Andelman, Mandelman Matters. Check him out. I mean, this is fantastic. You just got a little piece of what he does on a regular basis. He's got opinions that stream and take verticals and go on their own way, and he's got a logic that I think a lot of people in the industry just don't understand. I appreciate where you're coming from, and Martin, thank you so much for your time.
No problem. Always happy to talk to you, Brian.
Okay, so I'm going to stop recording this right now. Hang tight. Hang tight real quick. So I'm going to edit that down. By the way, when you got rolling there for a bit, it was awesome. It was just awesome. Hang tight.
Oh. Do you understand?